Hello and welcome back. Hope you are doing well. I'm Ric Bender, and the response to our previous FDIC video was just huge. We talked about rule changes, limitations, etc., and we are not finished with this subject. It's obvious we need part 2, and here's why. Are our deposits at risk even if we are FDIC insured? The answer is yes, and I'll explain in this video. So thank you for joining me. If you're here for the first time, welcome to the video. If you're looking for economic news with a healthy dose of sarcasm, you're in the right place, so consider subscribing to the channel. And don't forget to hit that like and notification bell so that you don't miss a single video. Share your thoughts in the comments below, and this video is brought to you by Money Metals Exchange. More about them later in the video. So, you watch the video, FDIC, you say my accounts fit the criteria, so I guess I'm good to go. I guess I'm safe. I'm feeling good. But are our deposits at risk? And the answer is yes. And as I stated, I am going to explain exactly why that is. Not to create fear, but to bring you some knowledge and to empower you. Because there is something going on in the world in which we live and the banking system around us that not many people are paying attention to, and we need to clarify. Because just because your account says you're FDIC insured and you fit within the criteria, your deposits, my deposits, are still at risk. And I'm going to clarify as well as I possibly can. First, we are living in a banking crisis. This is not hyperbole. This is not made up stuff. This is the reality. One billionaire real estate investor predicted that banks will close to the tune of 1 to 2 a week. Bank failures. This is like a pot of water sitting on a stove coming to a slow boil, which will ultimately bubble over. It is a massive problem. And many of you who are subscribers are aware of where we're going to discuss in this video, but consider staying and sharing this video because the masses have no clue. They're simply not paying attention, or what we do know is mainstream media doesn't cover this at all to the degree that it needs to be covered. So, as you may or may not know, banks borrow short-term, lend long-term. They make money on that spread. Now, what if I generated a whole bunch of long-term loans at a very low interest rate because the interest rate was low for about 12 years, and now the interest rates are really high? Well, what happens? I'm losing money. My bank is in trouble. This is a situation where many banks have found themselves to be in. But another huge problem are the regional banks and community banks that have made commercial real estate loans. As you know, since the pandemic, well, we've had remote workers, we've had empty buildings, we've had buildings 50% occupancy, 30% occupancy. This creates a problem. So again, these loans lent to developers are short-term loans, and these loans are coming due for refinance now in 2024, 2025, and into 2026. The problem is interest rates are much higher, and because of the vacancy factor in these buildings, and by the way, this isn't just office buildings, these are multifamily units. These are malls. These are any type of commercial building. These are hotels, resorts, etc. We see defaults and foreclosures all the time. Some banks are holding the default off of the balance sheet, waiting for interest rates to drop to figure it out. The problem is these buildings are worth half of that which these loans are for. They're completely underwater. This is a major problem. And developers are realizing, hey, this building's not worth anywhere near what I paid for it. I'm giving you the keys. Here you go. So this is a huge problem. Again, get that image, that boiling water on a stove, and it is bubbling. Can you imagine banks closing 1 to 2 a week? You see, let's say your bank collapses and you're FDIC insured and you're the only bank of the year. More than likely, your account will be made whole. But what happens when you're the 15th bank of the month, or the 20th bank of the month, or the 100th bank of the month? What happens when this thing has the possibility and the probability to be as big as it possibly can be? FDIC will be incapable to meet these accounts, these deposits. So are our deposits at risk? The answer is yes. Now, here's what happens. The big boys, the JP Morgan Chase, etc., the big commercial banks, they are watching these regional banks. They are picking, and they will pick and choose the assets that they want. They're already aware who's going to fail and who isn't. And they can pick and choose if they want to, merge the entire bank, or if they just want to buy some of its assets. And not only are there commercial banks, but there's private equity, there's private credit, there's all sorts of private investors also looking to get a deal on commercial real estate. But there will be picking and choosing, mergers and acquisitions. But what about those that are left? What about the one that just isn't chosen? Like the kids line up, you pick them for baseball, and there's always that last one, and nobody really wants to pick. Nobody wants to choose them. What happens about those banks that basically anything good has been taken out and gutted, and now what's left? Well, what's left are your deposits if you hadn't already run to that bank and taken out the money. You see, that's another thing that happens when people start to get wind that their bank is failing. We have bank runs. So you can imagine what will happen. We have banks finally declaring their need to be purchased, bad loans collapsing, the FDIC coming in. We have bank runs taking place. We have what's left is what's left, and what's left is the consumer deposit is at risk. Your money is at risk. Bail it out is out of the question. It's now bail-ins. A bail-in is when the collapsed bank will turn to its depositors and transfer your cash to their balance sheet in exchange for a stock certificate to this collapsing bank. This is what will happen to many, many people. And you need to understand, just because your account says FDIC insured and you follow the limits that we set in our last video, it doesn't matter when we have massive bank runs and massive bank collapses. And this is a very high probability of coming to fruition. Many people have no idea how big the commercial real estate debacle and bubble will be. On top of that, we have people getting laid off, the economy slowing down. Don't forget, this is something that is getting worse and worse and worse. So what do we do? Number one, you realize that your deposits are at risk. Number two, you make sure that you're in a large enough, safe enough bank. It wasn't too long ago that I did a video, the top 100 safest banks in the world. Watch that video. Make sure that the bank that you're in is not greatly or tremendously exposed to commercial real estate loans. Do your homework. And if you're in some small community bank, it may actually be a good bank, actually, if they're not exposed to this. Maybe you have great management. Maybe it is run really, really well. Maybe it isn't. Find out. We all know this. We all need banks. We all use banks. But what we want to do is limit the amount of exposure to a particular bank with our hard-earned cash. So manage that. Make sure you're spreading it out amongst safe top banks. And also with inflation and with the way the dollar is depreciating and purchasing power is shrinking every day, you may want to take some of that cash that's sitting in the bank and invest in precious metals, gold and silver, and protect your hard-earned cash that way. If you would like to learn more about precious metals, consider learning about Money Metals Exchange. They are my precious metals dealer. We've been dealing with them for years. Great service, great price. I've been really happy with them for many years. So if you're looking into precious metals, then click on the link in the description below to learn more about Money Metals, to see their packages, and maybe get the knowledge you need before you dig in. So thank you for joining me. Hope you got something out of this video. If you did, would you let me know in the comments below? And if you haven't subscribed, why not subscribe? And I will see you next time.